The price of silver has gone absolutely parabolic, and it's setting up for a short term blow off top and massive mean reversion trade to the downside. I'm Chris with Investors Underground, and this is Sunday Scan. Every week, we go over the top stocks and financial assets in the market so that you can learn how to analyze them and potentially trade them like a professional. We're going to go over a deep dive in silver today and go over a few other trades that might be setting up into the week ahead. 2026 is going to be a massive year, and this could be a pivotal point in the market, transitioning from 2025 to 2026 as money picks new assets to flow into and old assets to flow out of. Follow along until the end of this video and make sure that you like, share, and subscribe. I'll give the disclaimer now that I'm not a financial advisor, and these are not buy or sell recommendations. Everything I'm going to talk about is for educational and informational purposes only. Now let's pull up the chart of silver and get right into the analysis. So this is SLV. This is the iShares Silver Trust, and this is what we're going to be using as a proxy for the price of silver. The real spot price of silver, as it's known in the commodities markets, is actually higher than it shows up here. The real spot price is around $78 at the time of filming this, but I'm going to use SLV as a proxy that we can use to analyze a trend and discuss the most important things about how to think about commodities markets in general and how to think about mean reversion trades as they set up. So the first thing that I like to do when I'm getting into an analysis of a financial asset like this is to first look at a longer time frame. So I'm going to zoom out to the weekly time frame for SLV, and I can show you how commodity cycles tend to play out over time. So commodity cycles in general tend to be multi-month or multi-year cycles based on fundamental supply-demand imbalances. So we can see the last time that silver really had a strong cycle was in 2011. That was in the wake of a financial crisis, and there was a ton of money printing, and there's a lot of narratives around easy money policies and supply-demand deficits in the silver market. They caused a massive run-up from about that $10 mark all the way up to 50. So about a 500% gain or 400% gain in that cycle. That was followed by a hard crack and a huge, unwinding of that position over the next couple of years. You could fast forward over the last 10 or 15 years, and you could see just this massive base that's been building, and it's also correlated to the price of gold, which has been doing something very similar. So that is kind of how a commodity cycle tends to look, and we are in the middle of another one right here at the end of 2025. So I'm going to talk about why this is potentially happening and what are the signs to look for when you could have both a mean reversion trade while holding the same trend higher, or when you could eventually have a trend reversal. So what tends to happen in commodities markets is two things. You have the real market, the spot market, and then you have the financialized products. So in the spot market, these tend to move based on fundamental factors. That can be things like the silver miners' output. That can also be things like industrial demand and demand coming from other sources. So it's really all about supply and demand. If you have limited supply coming from miners and limited supply in the secondary market, and you have a wave or a surge of demand, that can cause a huge surge in the price. And even another form of demand can be financial stimulus. And that can be a reason why people pile into precious metals in general. So that's what we've seen in the past. And you can see that is why it tends to be a multi-year cycle. Now, fast forward to today, and you can see it has been a multi-month cycle as this starts to build, but we could be setting up for a massive mean reversion trade, but not necessarily a trend change, although that could come later on. So I'm going to talk a little bit about why I think this is happening and then how to really set up for a mean reversion trade effectively. So I'll zoom down my time frame down to the daily chart, and we will talk about this. So in 2025, this has been a year where the Fed has basically tried to bring down inflation, but they've still been using easy money policies. And that just means that they're going a little bit easy on the markets, and they're being a little bit more lenient because they're afraid that basically the labor market could soften a little bit. And so they want to be supportive of markets so that they don't have any liquidity issues. In the wake of that, what's happened is that you've had money flow into multiple momentum sectors. That has been in sectors like the quantum names, that has been in sectors like EVs, and it's also been in sectors like robotics and space-themed stocks. So it really rotates all around. But the commodity sector is a little bit special because they don't tend to run that often, but when they do, they tend to run for a long, long time. So we've had a huge move in gold over the past year or two, and it's really run up from about that $2,000 mark over the last couple of years to about that $4,500 mark right now. So silver is related to gold, but it moves differently. Silver tends to move later than gold, but it tends to move sharper and sometimes more in a percentage term than gold. And so silver is up, coming up on 160, 180% on the year. We're in the last week of 2025 right now, and the price is starting to go parabolic. So I'm going to go over really what a mean reversion trade could look like on silver, and then also what a potential trend change could look like. So if you see here, since about August or so, we've really been building this first leg of this trend, and you had the price go from that $33 mark all the way up to that $50 mark or so. So you can see a nice steady change in trend here, going from a little bit flatter to starting to steepen and be a steady trend rising with the volume associated with that. And you can see that it had a massive mean reversion, which just means that it falls to a different kind of trend line. So if you were to look at the bigger picture of silver, you can see there are trends within trends. There's a trend here where it's range bound. There's a trend here where it starts to break out. And there's a trend here when it starts to speed up. And then on an even bigger time frame, you can see that this is all part of another trend where this is connecting, and this was consolidation, and this was another leg of that trend. So what we're really looking at here is after a big move up from the beginning or the middle of the year, you had a big run up and a mean reversion and consolidation, and then a secondary breakout. And now we're starting to continue this overall trend and really speed up from that. And that is a good sign that we are potentially coming up on another mean reversion trend, which just means that it gets overextended short term and it falls back to more reasonable levels in line with this broader trend happening here. So I know a few things for sure. One is that the demand for silver from the fundamental side has not increased 150 or 180%. What has happened is that you have demand coming for silver from the leveraged financial product side. And so that means in the futures market, in the commodities markets, and even in the stock market and the options market, you've had a huge wave of investor demand in silver. And because it was neglected for many, many years, you tend to have very thin supply over top. Miners cannot increase output that quickly. And so when you have these strong demand runs, it can go very far, very fast. But the problem is that there's an old saying in commodities that the cure for high prices is high prices. And the reason for that is because as the price of silver goes up, mines and miners typically are able to ramp up production fairly rapidly over the course of a couple of months because uneconomic projects become economic. And so that means that there can be wheelings and dealings in the mining space. And it also means that anyone who's been holding silver, especially the mining companies, can start to dump it onto the market as those prices increase. And long-term holders of silver can also start to dump those prices too. And so basically what happens during a trend is that you have a huge wave of demand coming in, and you had a thin supply profile going into this. But as you get more and more extended within that, and as the volume becomes greater, you no longer just have fundamental buyers in here. You no longer just have the holders in here. You have the momentum traders and people who have basically weak hands all piling into a financial asset just because it's going up. So it's no longer really about the supply demand dynamics of silver itself, but it's about everyone going to the same thing. But the problem with that is that if everyone, from this point on is in just because the price is going up rapidly, what happens when it comes to a short-term top and stalls? All those weak hands that were just joining the trend up here tend to bail, and that can cause a massive mean reversion down to levels like, maybe that $55 or $60 level. And so that is really what we're looking at for this week of how this is setting up. There's a couple ways to measure this trend. One of them is, using those broader trend lines over here, and can see on a larger time frame of what that looks like for silver. And then there's a hugely important concept in trends and how they change, and that is known as rate of change. And so what happens is that after you had a trend in play for a while, and that trend now starts to speed up, and what I mean by that is that you can see that this has been a fairly steady trend here. The higher lows have been mostly in line, and this is what I would call normalized action. But what happens if you were to draw a trend line over here and maybe even a trend line above it is that this action here is associated with very high volume and it's breaking out of that trend. So this is called a parabolic speed up of a trend. And so what happens is that is usually when you have short start to panic out and you have long start to panic in, and you have people who don't normally trade silver start to pile in as well. And so all eyes are on silver, and the higher it goes, the more unstable it becomes, because it is, again, driven by highly leveraged financial products, not by supply and demand dynamics in the actual commodities markets. So these can be very extreme moves, but they can set up for very nice trades on the long side if you are using these dips within the trend to participate. And then once it really starts to speed up, that is when I tend to flip my bias for more of a mean reversion trade. So there's a couple ways that these trends can end. So you can see over here, this was a massive mean reversion trade when this went from the price of 49 or 50 down to the price of 40 or so. So that was about, call it a 20% mean reversion. I think we're setting up for something very similar. In this case, this was basically an extended trend where you had a bunch of people build up positions, and it never had any huge dips, so it kept a lot of people in there. And then when it was finally crowded enough, it mean reverted, and then it needed time to consolidate and build again. We are now doing the exact same thing here, except this trend is even better because it's starting to speed up and go parabolic. Sometimes trends end because they go on for a long period of time and then they end. Other times they end because they're in play and then they start to speed up and people panic in on the long side and people panic out on the short side. And so those tend to make for even better mean reversions than this. And so what I'm expecting is if we run up to say 85, 90, even $100 or somewhere in there, I think that can happen very rapidly. And then around the turn of the year or around the next couple of days, I think that we can fall by 10% in a day in the price of silver, and then over the course of maybe a couple of weeks or maybe a week or two, it could even fall 15 or 20%. So I say this with a caveat, and that just means that although I'm expecting a short-term mean reversion trade in silver, that does not necessarily mean that the whole trend is done. It can mean that it's done, and it means that it's more vulnerable to being done, but the miners in general have not had enough time to really ramp up enough production to oversaturate the market yet, but that will be coming if prices stay at these levels for extended periods of time. But I really think that this is due to financialization and leverage of the commodity. And so there's a couple things that I think could derail this. So the higher it goes, the more vulnerable it becomes for that big pullback to a more reasonable trend line. But what could really set that off? Well, what I look at is you have to see what are the factors in play that could really drive it higher. And it's usually a confluence of things. And that tends to be what happens with the best trends, is that you have a confluence of factors that all come together to have a very strong demand profile while supply is very thin. And that is by definition what causes these trends to really speed up and go for much further than you would really expect. And so what could derail that? There's a couple of things that I think could really derail that. And one of them is that we're coming up to the end of the year. It is currently December 27th as I am filming this. And I think that as we get into the new year, it's a new tax season, and a lot of people who have been holding silver, I think, will be taking profits and rolling those profits into the new year instead of having to pay taxes on them in a couple of months. They will be able to push that out a year. So that is one thing that could derail the short-term silver thesis to the long side. I think that could cause a mean reversion. Another thing that could cause a mean reversion is if the Fed changes their tune at all, or if we get economic data that causes the Fed to be a little bit more hawkish instead of dovish, because that could strengthen the dollar and that could cause a mean reversion. Another thing that could cause a mean reversion would be a counter trend catalyst. And so that could be something like the CME or the commodities market or the futures market, basically raising the margin requirements due to increased volatility. So in 2011, when you had the last cycle turn, basically what crashed the market then was after several sessions of the CME raising margin requirements. And basically, if you have a very long leverage positioning in an asset like silver, as they raise the margin requirements, that can kill the demand because people have to put up more money or take profits. And so that can basically change the supply demand profile and cause profit taking and cause a mean reversion. So that's another thing. And really the final thing is just that it gets overcrowded on the long side and it gets less crowded on the short side. So if you see this volume increase here, what's really happening over time is that you have more and more longs getting a higher and higher average. So maybe you had some early people in silver in the 20s, the 30s, and even the 40s or so. But what's happening is as the cycle goes on, more and more longs get more and more bullish, and new people come into the sector and they have a higher average. So while someone who's holding from 30 or 40 might be able to withstand a lot of volatility, if someone has been piling in at 65, at 70, at 75, and all of a sudden the price goes down to 60 again, or even down to their average, they might be a lot more likely to sell than someone who has a much lower average. And so the ideal situation for a mean reversion trend is to have a lot of late longs in here using leverage and basically getting their average super high at the same time that the commodity is the most vulnerable to a massive flush and crash. And so that is what can make for very clean mean reversions. And it's actually the higher it goes and the longer it goes, the better that mean reversion trade can happen. So I'm talking about from a trading perspective of how to capitalize as the price of silver drops very sharply in a short period of time. I'm not saying that the whole commodity cycle for silver is totally done. I think there's a lot more things that go into play, but this is setting up really well for a massive parabolic mean reversion trade. And this is something that people like Phil Goedeker have talked about in their Legends Playbook course about parabolic mean reversions, of looking at different factors like the RSI, the extension, the overall move, the timing, the slope of it, and then looking for some telltale signs when it's ready to crack, and then how to capitalize on that with either short positioning or with put positioning if you're an options trader. So now that we've gone over some of like the big picture things for silver and how it's setting up right now and how it could potentially have a massive mean reversion trade, let's zoom into a shorter time frame like the 1 hour chart. So again, I will zoom out a little bit here just so you can see this trend that's been in play, and you can see the massive speed up here. So if you were to draw a trend line right around here connecting these lows, you can see that this is a deviation from that trend line. It's starting to speed up. And two things happen when something starts to speed up. One is shorts get blown out. Anyone who's been shorting this tends to get, exit their positioning. They have to cover. And so that can cause another layer of demand. And then at the same time, you have all the generalists from the market come in, and even people from crypto and everywhere else, they're like, okay, their normal asset class is not really moving. So they're going to move on to what is actually in play and moving. And a lot of times people are doing that with leverage, especially people who are, active in the crypto space, they're active in the futures markets, the commodities markets. Most of them are using heavy leverage, and most of them are just in for the price action, not because of the actual supply demand dynamics of the fundamental case of silver. So how do you actually set up for a parabolic mean reversion trade? So a couple of things that I look for is, one, that action to start to speed up. You want that volume to increase. And then I'm on watch for either counter trend catalysts, like we talked about with the CME raising margin requirements. I'm also on watch for time vulnerabilities as we go towards 2025 into 2026. That can cause a wave of profit taking for tax purposes. And then you could just have a different kind of catalyst, like let's say a major peace resolution comes to be, or maybe the Fed gets a little bit more hawkish, or you could have some other things like that. So we'll see what happens into the next week or so, but I think that within the next probably 7 days, we will have a massive mean reversion trade in the price of silver, and I want to capitalize on that. So what I'm going to be looking for is, after this speed up in action, you can use different time frames to really gauge the trend now. So you could use a 1 hour, a 4 hour, anything like that. You could even go down to a 30-minute or a 15-minute on like kind of the daily chart. And then what you're looking for is for the daily chart or for the higher time frame to look like it exhausted, where it has one final giant gap up, and a huge amount of price action. So maybe, gaps up to 85 or something like that, or 90, and you really want all the shorts to be blown out, around the open. So let's say we get to one of the days in this upcoming week, and you have a massive gap up to start the week, and it exhausts out. Maybe you have some headline or something like that, and you see a massive volume increase and a huge ramp up. What you want is, after that giant ramp up, you want to see it fail. You want to see it flush and struggle to reclaim. So after it flushes, let's say we're to flush to an area like this, what happens is that you want to draw a line underneath where that candle flushes. So for instance, if we had a much more exaggerated version of this, let's say that we gap up to 85 or 90 or so over the next couple of days, and then you have a big flush. So something like this. What you would want to do, or what I tend to do, is you draw a line underneath that level, and that becomes your key. And what you want to do is, basically, if you think that it can fail to follow through, which just means it can no longer break those highs, maybe it tries to retest them, and then it starts to break below that key level, then you can basically risk against those highs as this trend is playing in. So if you think the top is in, you can use a structure like the failed follow through, where you see a flush, a retest, it can't follow through, and it fails that flush. That is a good time to try a mean reversion trade. And then you're using things like VWAP on your screen. If it is below VWAP and VWAP is acting as resistance instead of support, then that is another good sign that you could be in for a good mean reversion trade. So those are just a couple of things that I'll be looking for in the days ahead as I look for the silver mean reversion trade. So we have the big picture view and the context for that. Now we zoom in. We know that it is speeding up, the volume is increasing, and you're really getting into what we call a capitulation, which is a term that means to formally surrender. And that comes from both sides. It's not just short surrendering. It's long surrendering to FOMO for buying, and it's short surrendering to fear selling. And so at the same time, when you have the least amount of shorts in there, you want to have the most amount of leveraged longs in there. And then you want the price to fail. And then you want it to try to reclaim and it can't. And then it fails under that key level. And that is a beautiful setup for a mean reversion trade. The way that I will most likely be using this is with put options. So you can short the equity, or you can short a product like SLV if that is what people are comfortable with. But I like to go after put options on something like this, because if it fails and if it actually has that mean reversion day, silver can drop 10% or more, in my opinion, in one day. And you could have the put options go 5x, 10x, sometimes even 15 or 20x on a move like that. So the higher it goes before that eventual mean reversion, the better, because that means the more reward that goes in there before it. But there's a caveat to that, and that is you don't want to be stubborn on this. You want to use a structure like the failed follow through, like we talked about. So you want to see it fail, try to retest, and it can't retest, and then it starts to fail that level. However, if I'm using put options, maybe I'm watching it fail, I'm watching it retest, and I'm getting the put options because I want it to go down. I'm getting the put options around here on that retest. And then what I want to see is I want to see it break this level and start to trend cleanly down. What I don't want to see is for it to basically get above these highs and start to trend higher. If it does start to resume its upward momentum, my thesis is void for that trade, and I get out. I sell the puts for a reasonable loss. And again, you have to size smaller with put options. At least that's how I do it, because with put options, they can move so quickly that it can really damage your account or damage that position if you are not sizing appropriately, and then also sticking to strict rules of when to cut risk. And so that's how I would approach a silver trade coming up in the next week or so, which I think will really play out. So that is really what I want to go over. If you have questions on this, if you disagree, if you have other things that are helpful, leave that in the comments. I want to hear it all. But really the things that I will be looking for is the big picture view of the trend, the volume increasing, the speed up, the change from prior trend, the change or the rate of change in general of this, the shorts getting blown out, the leverage longs getting in of generalist investors, people who are not silver bugs, but people who are just late to the party and trying to pile in. And that is what makes it vulnerable. And another thing is things like RSI, or the relative strength index. As that gets more and more overextended, that is another signal that we could be approaching a mean reversion level. So it's not about totally anticipating that turn. It's about watching it exhaust, that huge blow off move, and then fail, and then try to retest. And it can't get higher, but it can get lower. And that is a setup for a parabolic mean reversion trade. So that's all I have on silver. I'll go into a couple other names very quickly, but silver was the bulk of Sunday scan this week. Rocket Lab, I think, is also setting up for an end of year possible trend change. And that just means that after this nice parabolic run, it has some good catalysts. It is starting to fail. So what I'd like to see is for it to try to retest and fail to retest. And then I think we could have some more downside in the future. And there's a couple other names associated with that, like the quantums that were running on some of the space related momentum that is doing the same thing, where after a run like this, it's failing. I think it'll try to test those highs again. It probably will not be able to, and then it could break those lows. IONQ, very similar situation where it tried to have a nice bounce and now it's failing those levels and likely has more downside, in my opinion. Tesla, I'm still bullish on, especially into 2026. You could see how much consolidation that this has really had in multiple tests. And what you tend to see is around those massive levels, around that 500 mark or so, it tends to fail several times as it's building strength there. And what I would ideally like to see is for it to kind of go sideways for a little while and then eventually tighten up and then break out. And that would be a huge, what Ariel calls a flat base breakout. And so he also did a class on that in the Legends Playbook, which is where you have 8 of the world's best traders basically sharing their top setup in incredible detail so that people can learn how to do that as well. So a couple other names on watch. For the end of the year, SNDK, this has reclaimed trend. Some of the AI names, especially in more the memory sector, such as SNDK, MU, and LITE, have all been leading the pack in the AI names. And I think that these could have continued strength into 2026. And you can see, something like this, a great example of holding trend fairly well with some mean reversions along the way, while still building higher overall. So those were the main ones. And then finally, we have CVNA. CVNA, we've talked about this a lot. I had some nice trades on it last week where this had an index add and it had a huge amount of buying for that. And then after that, it was actually added to the index. Now that volume is changing, that demand is changing. And I think as we get into 2026, you will have a lot of profit taking on this name. And I think it could have a massive, another failed follow through back down to some key levels there. So those are really the names that I want to go over for this week. I hope that it was helpful. Again, people who trade professionally and do this for a living, you're looking at many, many nuances within a broader trend. So you can have a big picture view on something, but it's about getting very detailed and very specific about what you're looking for and the actual structure of how you're looking to trade that trade. So I'm looking for a parabolic mean reversion trade in silver over the next week or so. And hopefully we get a big gap up and it blows out all the shorts, all the longs get in with leverage. And then I'm looking to have a hard fail and to fail to reclaim that trend and then break those lows and then be under VWAP at the same time that you have an overextended RSI and everything. And it's just a perfect recipe for a massive mean reversion trade. And I think the best thing that could potentially set it off is a counter trend catalyst with either the CME raising margin requirements or with a counter trend catalyst from the Fed or with a peace resolution or just rolling into the new year into 2026 and triggering some profit taking there. So I hope that was useful to you. Again, I'm Chris with Investors Underground. Every single week we do a Sunday scan where we go over the most in-play tickers and the most in-play stocks, and we talk about potential trade setups. And so if you're interested in that, follow along, like, share, and subscribe, leave a comment, and then check out Investors Underground and the Legends Playbook as well. So this is the last scan for 2025. I'll see everyone in 2026. Trade them well, and I hope that you capture a fantastic trade on silver. Take care.